Welcome, everybody. Welcome to our Maze Live 2017, sponsored by the City of San Leandro. First of all, let me introduce myself. I'm Catherine Yuan. I'm one of the partners with Maze & Associates, specializing in accounting services and audit. I have been with the firm for 21 years. And let's see, what other fun facts? Oh, I will be your MC today. So a couple of administrative items. Sign-in, sign-out sheets are located at the registration table. If you have missed it, it's right outside of the entrance there. You should also receive a presentation package when you signed in. If you are going to leave early, please do sign out so we can give you the accurate CPE hours. Restrooms are located right next to the registration tables. Please put your cell phone on silent or vibrate mode. If you need to take a phone call, you're welcome to, so please just exit the classroom and then you can take it outside. Speaking of cell phones, we do have charging stations this year. It's located on my left-hand side against that wall. Today's session will be recorded, and all the classes will be put on YouTube later, so in case you or your fellow coworkers want to watch a particular class, and you can go to the YouTube and watch it. If you have any questions during the classes, please raise your hand and wait for the mic so that we can record your questions accurately for the recording later. If you need any help, please look for one of the people with the Maze name tag, and then we can assist you in any way. Finally, I hope that you guys all read the parking instructions that we sent to you. If not, most of the parking spaces around this building have a time limit. And so we advise you to either move your car or park it at the daily parking, which is at the parking structure at, a block from here. It does require a $2 parking fee. If you don't have cash, we actually have cash that we can provide for you. With that, I would like to introduce our first speaker, Amy Meyer. Amy is a CPA. She's also an audit partner. She has been with the firm for 24 years. Like last year, we want to make this lighthearted, so we're going to tell you some fun facts about Amy. So today, the two fun facts that we're going to tell you about the speakers are their favorite movies, and if they were not an accountant, what would they want to do? Amy's favorite movie is Rising Arizona, and if she were not an accountant, she would have been a rodeo announcer. With that, Amy.
Good morning, everyone. Can everyone in the back hear me okay? No? Oh, all right. I'll move it a little closer. How's that? Is that better? All right. Great. So we have started the morning off here with the exciting topic of single audits. I'm sure you all just can't wait, but that's why we have it in the morning, so you won't fall asleep in the afternoon. So we're going to go over single audit findings and single audit update and common findings. So some of the topics that we're going to cover today are similar to last year, and some of them are actually the exact same topic, because last year uniform guidance was new to everyone, and now it's not so new anymore. So these are the topics we're going to go over. I'll just skim a few of the topics. Unless you do have specific questions, then we can dig into them a little deeper. All right. So uniform guidance, again, it's no longer new. Everyone has to have implemented the uniform guidance as far as reporting and compliance. It is still broken into 6 subparts, and the asterisked ones here at the bottom, those are the majority of the areas that had significant changes from the old circulars that you were used to, the OMB circular A133, A87 that you were used to in the past. I did want to highlight the procurement standard in the uniform guidance. That is included in, you can see the references here, 317 and 326. Back on the very first slide when I had that link for the uniform guidance, if you haven't done so and you do have federal grants that you receive, you want to have that link bookmarked on your webpage, because it's a very easy website to go through that you can page through the uniform guidance itself. It's got you can click on the main link and page down, or you can go to the specific sections within the uniform guidance. It's very as far as federal regulations go, well organized. So the uniform, I wanted to focus on procurement because the federal government extended the implementation requirements for the procurement standards that are in uniform guidance. It was extended an additional year this year, so implementation is required for periods beginning after December 26, 2017. So fiscal year 2019 is when you have to have implemented the procurement standards. You can no longer defer implementation. And what that means is any grants that are subject to uniform guidance, which we'll go over that in a minute, if you procure any contracts, you have to use the procurement standards, which we'll go through. And if you decide to defer for this, you're not going to implement it in fiscal 2017 and you're going to defer that extra year, you are required to document that in your internal procurement policies. So the next section we're going to go over is the 2017 Compliance Supplement. The Compliance Supplement identifies requirements that federal grantors expect to be considered during an audit of federal grants. So it's a good resource for grantees because it shouldn't be a surprise if the auditors ask a question. You should already be familiar with the federal requirements for each of your grants to know what's going to be required for compliance. This new Compliance Supplement it's issued every year. The new one is 4 periods beginning after June 30, 2016, so fiscal 2017. We, as auditors, we're required to use the most recent Compliance Supplement for planning our audit. It's usually issued in final form around this time of year, but this year's a little unusual. There's some delays of some sort. And so the federal government issued a draft version of the Compliance Supplement to be used for planning purposes only. So we could start a single audit, but we couldn't complete a single audit right now. We can use it for planning only. The final date of issuance is not quite known. It's being vetted. It's not expected there are going to be significant revisions between the current draft and the final version, but it's just not available yet. So the Compliance Supplement, you should use it to help you as a grantee to, again, ensure compliance. You want to use the grant agreement. Of course, it's always the overriding document to ensure compliance that you want to comply with. You want to use your CFDA number and look through the Compliance Supplement to see if there are specific requirements for your particular grant. Not every single grant is included in the Compliance Supplement, but the majority of them are. So it is, the Compliance Supplement is broken into 7 parts. The 5 most important that you would need to be involved with or familiar with are here, including, you want to start with Part 2. Part 2 is a matrix of compliance requirements. There are 12 compliance requirements for each grant, but not all of them are applicable to each grant. So the 12 compliance requirements include the most important or most significant ones are activities allowed and unallowed, cash management, reporting, subrecipient monitoring, and then there are others as well. So this matrix of compliance requirements is a checklist that tells you for the CFDA number which of the 12 compliance requirements are applicable to that grant. So some changes in the Compliance Supplement this year include Part 2 updated the compliance requirements for certain programs. Something that may not have been applicable to a grant last year is applicable this year. Part 3 was updated to reflect the extension of the grace period for the procurement. Part 4, again, updated the detailed agency program requirements. So this is, Part 4 is the part where you're going to go into your grant, pull this piece of the Compliance Supplement for your particular grant, like say you're doing a 20.205 Caltrans street grant. You pull the 20.205 Compliance Supplement out, and you can see all the requirements, what we use as an audit program. And so you should make sure, very rarely should you have findings related to the Compliance Supplement requirements, because if you're familiar with it, then you know to use it yourself as an audit program internally to make sure you're in compliance with all the requirements. And again, nothing in the Compliance Supplement is a surprise for you as the grantee, but you never know. There might be some little nuances that you're just not quite aware of that the federal requirements include. So Part 5 of the Compliance Supplement is the cluster programs. So for auditing, each major program is usually one CFDA number, but there are certain CFDA numbers that are clustered together and considered one program as far as auditing is concerned. So this lists the clusters of programs that are combined. They have such similar compliance guidelines and administrative requirements that they're considered one program for reporting. And then Part 6, there were no changes. Let's see. So part 2, again, that was the matrix, which includes the visual summary of the compliance requirements. But the grant agreement may require additional requirements that are not required in the compliance supplement. An easy example is the compliance supplement. I keep using 20.205 as the example. In the compliance supplement, CFDA 20.205, your highway grants, says that matching is only required of the state. So if we were the auditors and just to come in and not know what we're doing, we would say, oh, NA for this grant, because this grant's a pass-through from the state, the local agency is not a state, so no matching requirements. But as most of you know, Caltrans requires matching on the grants. So matching is a requirement for a 20.205 grant because the grant agreement contains a more restrictive compliance requirement. So the grant agreement can be more restrictive. It usually can't be less restrictive than the federal regulations. So part 3 is provides general guidance on when to audit for sections. It contains all of the details for the 12 compliance requirements, again, activities allowed and unallowed, cash management, subrecipient monitoring, et cetera, et cetera. But it's broken into 3.1 and 3.2. And what that is related to is the grants that are subject to the old, still following the old circulars. I'm moving my hands and realizing Catherine's betting in the back when I'm going to hit the microphone over because I can't not talk with my hands. So part 3.1 is for grants dated prior to 12/26/14. So hopefully you're all familiar with that now because that date has come and gone, goodness, 2.5 years ago now. And then 3.2 are for grants that are dated on or after 12/26/14. So those are your grants that are subject to the new uniform guidance. The others still follow the old rules and will continue. The other grants, if you have a grant that's dated 2013 and you're still expending funds under it, it will continue to follow the circular requirements. That's your cost circulars, which costs are allowable under that grant. The procurement will still go to the life of the grant until it's spent down or spent out and completed. So any new grants which are subject to the new uniform guidance requirements. So that's why there are 2 sections to part 3. So part 4, again, this is the detailed section of the compliance supplement. I've got them all listed here. These are the 12 areas. They are lettered in the section, and the letters, so they're consistent from CFDA number to CFDA number, the same letters. A is always activities allowed and unallowed. There are, with very, very few exceptions, I think only 4 exceptions in over 200 CFDA numbers that are included in the compliance supplement. There are only 4 grants out of that 200 that do not have activities allowed and allowable costs and cost principles. Those compliance areas are always a requirement of the grants, which if you think about it makes sense. The most important part of a federal grant is it an eligible cost? Are you allowed to charge that cost to the grant? So that's why it makes sense that those 2 would be applicable to all the grants. I was actually surprised to see that there were a couple that weren't, which was kind of weird. So I didn't dig into them because they weren't common CFDA numbers so that I think any of our clients have. So you can see the other areas here. There are 2 letters that are, they're in alphabetical order. You can see A, B, C, D. But D and 1 other letter are missing. Those are reserved for the future in case they decide to come up with new compliance requirements. I'm sure you can't wait. All right. So I touched on it, the grant agreement award dates. Again, we talked about the old circulars, whether your grant is subject to all the circulars or the uniform guidance. So that's how you tell the dates. It has to do, again, with the December 2014 date. And I didn't mention, you're welcome to ask questions at any time, and if you have any questions, just raise your hand and they'll come around with the microphone so we can hear you. So I don't think this is a surprise. The threshold changed last year for when a single audit is required, $750,000. So that's no longer new. You can't see that. It's all right, just look at the bottom part. So the threshold is $750,000. Then the A-B program, and these terminology with the major program, A versus B program, that all has to do with what is going to be audited. The programs we take the CFA and we use these rules that are in the uniform guidance to determine which programs are required to be tested for that particular year. So we're required to do all these calculations, assess them as high risk, low risk based on some checklist questions, and then that tells us which programs are required to be audited. It's a mathematical formula, because then on top of that, after you figure out all the required programs, you have to make sure that then you have enough coverage of the CFA. So if you have 3 programs that are required mathematically, or I should say that have been assessed and they are required to be tested in a particular year, then you take the total of those programs, divide it by the total of the CFA, and determine whether you have 20% or 40% of total expenditures, depending on whether the entity, so your entity is assessed of whether they're high risk or low risk. And the easiest questions, you're automatically considered a high risk entity if you haven't had a single audit in the last 2 years. You know, because there are some clients that you go in and out of having federal awards or having above and below the $750,000 of expenditures. So that's why sometimes we think we're done, then we have to add another program, because if any dollar on the CFA changes, it can change the formula, that when we have to make sure we still continue to have enough coverage for the audit. So I might breeze right over indirect costs. Is there anybody in the room that is using the 10% de minimis indirect cost to be charged to the grant, or using the 10% rate? That's not a surprise, no one. So I'm just going to breeze through this because you can elect the 10% modified total direct cost rate for federal awards if you don't have a negotiated indirect cost rate. So I'm going to breeze through this unless anybody has any specific questions on it. And you do have the information in your materials. So we talk about what it includes, what it excludes, but we haven't run across any clients using it so far. My understanding is because most clients want to be able to charge program costs to the grant and don't have room in the budget to charge administrative costs. So it makes sense. So remember, in this presentation, we're leading up to common findings that we see during our single audits. And so that's why I'm going to start highlighting, wanted to highlight this area, is compensation. That's an area where we can see a lot of findings over time. Now, the rules under the circulars were different than they are under uniform guidance, but not much different. You know, in the end, if you're going to charge salaries and wages to the grant, it cannot be based on budget estimates alone. It has to be based on actual. So you can charge based on estimates at the time that you're filing a reimbursement request, but you have to circle back and make sure that they're equal to or approximate the actual time charged to the grant. So you want to keep those records. We highly recommend, if you're going to charge salaries, that even if it's, if you have your procedure is to allocate salaries on a percentage basis, if your employee is going to charge time to a grant, they should keep specific hours. That's the best recommendation, is to keep your actual time for grants. You have a question? That's a good point. It's on a grant-by-grant basis. I mean, so the question was whether the salaries and wages, whether this is on a grant-by-grant basis, because there are some grants where you get to charge 100%, like your police grants is a good example, where you get to charge 100% of that officer's salary. So you're right, if that officer is only working on that grant, then you would have something in your records that shows that. So you should still have something in your records that's identifying that they're assigned to that grant project, or there are some grants where you can only charge overtime. You know, you can only charge regular time, those types of grants. So it's going to be specific, but you just have to have the records in place. There do have to be records, yes.
And the de minimis rate, is that also, is that for grants that you don't have personnel costs?
The de minimis rate, so for the indirect costs, that is just for the grant in total. That is, so there's the formula. I'll go back to you have your direct, so this example of the de minimis rate, I'm pointing to the screen like you could see what I'm pointing to. You can see that you have the direct cost of the grant, whether or not they're salaries. It could be capital, it could be subcontractors, vendors, and then you do the calculate, you back out capital equipment, you can only charge a certain portion of subcontracts, and then you have your modified total direct costs, and so you can charge 10% of $125,000 at the bottom. You can use the 10% rate, it's just a flat rate, if you don't have a negotiated rate as a citywide, so it's not grant by grant. Mm-hmm. Any other questions? Oh, got another question.
The question is, you mentioned, Amy, that you probably want to assign direct costs, meaning tracking the costs, as opposed to doing an allocation. So am I interpreting that to really say to agency cities, discourage trying to just do percentage allocations, really spend time tracking the actual hours?
That's the recommendation, yes, to track the hours, because if in the event you do an estimation, you have to then do some time studies and something to show that the estimate is close to or equal to the actual. So you do have to do that. You always have to go back and do that assessment. So you can do estimates to do the charges and reimbursement requests because you want to be able to keep your cash flow going, but then you have to do some, again, time studies or true it up to actual to make sure what's actually charged to the grant is equivalent to the actual. Does that make sense? If the amount that you're charging, if for some reason your actual payroll costs came in more than what you had charged to the grant, right, then it would be up to you if you had enough, because you can true it up that way as well. You could request, if you had money in the grant budget, you could request the actual down, or you could just document that in your records. So you're never required to true it up to actual. You know, that's going to. You would have, so the question is whether you would have to true it up to actual even though you're charging less than the actual. So you do have to have documentation that the person worked at least to the amount you charged. So you would have to have records showing that the actual payroll costs exceeded their time on that particular grant, because you have to be able to show the records that, you know, you estimated 10% and they didn't spend 5%, you know, they spent 15% on the grant. So you have to be able to show that in the records. Yes. Another question?
Yeah, hi. In terms of indirect costs, are most agencies you see using a de minimis rate or using a negotiated rate? How common is that? So
I have not had any clients use the de minimis rate, and I polled a couple of my partners, and I don't think any of us have seen any de minimis rates yet. And that's why our guess, and this is a guess, is that because it was so new, that most clients have enough actual costs to charge to the grant. There's no extra room in the budget to now charge admin. You know, they'd rather put the program costs in.
But you don't see that negotiated rate very commonly, or do you?
We do have clients with negotiated rates,
okay.
Yes. And so then they are unable to use the 10% at that point.
And one follow-up, if I could. The cost allocation, does that qualify under the indirect and the de minimis rate at that point? Is that what you would apply, and does that need approving? Right?
It needs approval. You would have to get that approval under the grant. It has to be they don't call it an A133 compliant allocation anymore. It'd be a uniform guidance compliant allocation now.
That need to stay under the 10% de minimis? Is it applied to that threshold or that category?
That is a good question. I don't. Because it would be overhead, I think it would still be part of that because it is an indirect cost. My guess is that it would be within that. Yeah, it would have to be fall under that because it's not a direct cost of the program. Good questions. Any more? So the CFA, the fun preparation that you have to do each year for the audit. Those auditors want to test that CFA. And all your departments have to tell you all those federal expenditures. You know, that's something that we see. You know, the finance department knows what grants they process, but it's the other departments knowing that they have to funnel all of that information into you so that the CFA can be prepared and be entity-wide. The CFA has to show all of the expenditures of all of your federal awards for the fiscal year. So under uniform guidance, it's in section 508, the auditee's responsibilities for preparing the CFA, including does it conform to this section 510? Does it include the components? Are all programs identified by the CFDA number? Are all programs, as I wander off, direct and indirect programs? So you're required to document or identify programs that are direct awards from the federal agency versus those that you're the pass-through entity. The grant is coming to you from another non-federal agency. So you have to include the name of the pass-through entity and identify the pass-through number must be included. Usually your grant award number from that pass-through entity, from that, like if you're getting a grant from the state, your grant agreement number. If there isn't one, then you have to include it. You have to say NA, not available for those pass-through agreements. The direct awards from the federal agencies are not required to include a grant number on the CFA. So something that was new last year was to, prior to fiscal 2016, disclosing subgrants was a requirement. It could have been done on the face of the CFA or in the footnotes to the CFA. Now it's a requirement that it be on the face of the CFA. So now the footnote is no longer required because it's a little redundant. So a separate column on the CFA showing the subgrants. Cluster programs have to be identified. And then this is something that the last check mark here is not specific to uniform guidance, but this is something as the auditors that we are highly recommending you do, because it is something that we do as the audit, and you'd rather find the problem before we find the problem, because then if it's significant, it becomes a finding, is whether your CFA is complete. Look at your CFA analytically. Did a grant drop off? Is that intentional? Was the funding complete last year and it's correct that it's not there this year, or did it get missed? Does your grant include expenditures that shouldn't be on there? Are you including non-federal expenditures on the CFA? There are certain grantors that, even though there is a provision down, deep in the uniform guidance, and it used to be in the OMB A133 as well, is that if you cannot distinguish between federal and non-federal expenditures on the CFA, it's okay to put it all on the CFA. But there are some grantors, like the State Water Resources Control Board, that will say no, they only want to see only the federal award expenditures, and if you include extra non-federal expenditures on there, they'll request that the single audit be reissued to exclude that information. So you want to make sure that you're looking at your CFA and making sure that it's complete, not miss anything, not overstating or understating. It's including all the things that were listed here above with the cluster programs, pass-through entities, grant award numbers, things like that. So this is just a little snippet of what the CFA could look at, the headers for the CFA, the grantor name, the CFDA number, pass-through entity. So this is an NA because it's a federal grant. It doesn't have to say NA for the direct awards. And then the new column is the expenditures to subrecipients. Well, it's not so new anymore. I have to stop saying new. We're going to the second year of uniform guidance. So also required in the single audit is as the auditee's responsibility are the notes to the CFA. So any loan or loan guarantee programs, you have to include the basis for how the loan and loan guarantee programs expenditures are included on the CFA. And any significant accounting policies that were used to prepare the CFA should be disclosed as well. And then there is as auditors, we're usually not required to provide negative disclosure in footnotes or disclosures to the financial statements, but this is an exception where there's a requirement that you say whether or not you elected to use the de minimis rate. So you have to have a negative disclosure if you have not elected to use it. So internal control. So there's a big focus on internal control, and So we talked about this last year, and we want to just re-emphasize it again this year, because there is an emphasis in the uniform guidance about internal control. Although you could stumble across charging the correct expenditures and only eligible costs to a grant, it can't be on accident. You have to have internal control in place to ensure or reduce the likelihood that you will reduce the likelihood that you would include non-eligible costs in federal awards. So that's why there's a stronger focus on internal control. You want to achieve the objectives of efficiency and effectiveness of operations, reliability of reporting, and compliance with applicable laws and regulations, because it's not an uncommon. You have to have internal control in your normal everyday operations, but you also have to have it in place for your federal award programs. So for internal control compliance over federal compliance, that transactions are properly accounted for. They're in the records, they're properly accounted for, they're supported, just like any other, but like when you talk about your compensation records, you have to sometimes have a separate tracking if it's not part of your normal process, depending on how your accounting records are maintained. And that all of your records are in compliance with the statutes, regulations, and laws of the grant, of the federal government, and that your assets are safeguarded from loss. So when you're purchasing capital assets with federal awards, they have to be safeguarded. You have to do an inventory. I think I've got it in here later on in the slides. Inventory every 2 years for your federal award funded capital assets. So the focus on controls, this is the same process that we go through with the normal financial statement audit, but you want to still think about it specific to the federal awards programs. Segregation of duties, monitoring your controls, and address any instances of non-compliance. There can be situations where you run across non-compliance during the fiscal year before the audit begins. If you address it, that means your internal controls are working. You document it, you deal with the grantor. If you drew down funds that were not eligible, but you've already communicated with the grantor, corrected a subsequent reimbursement request, when you do those, that's your internal controls are working effectively, then it's not a finding. If you have that, so long as you have it documented in your records. Say if the auditors find it, then we think we've found it, so it's going to be a finding. But if you can say, no, we've got these records, we've communicated with the grantor, we already addressed it, it's handled, then it doesn't have to be a finding. So kind of like what they tell us as auditors, documentation, documentation. We can tell you all day long what we did, but if it's not in the records, you don't have an email, you don't have something that supports your assertion, then you can't assume that it was done. Okay. So subrecipient monitoring. Again, not a new concept. This is when you provide grants through to another agency. So you are the pass-through agency. You receive it from the federal government and you're passing it through to another agency. Your easiest, most common are your CDBG grants. Home grants are the ones where you have a lot of subrecipients when you're giving to nonprofit agencies, or you might even have an agreement where you're providing it to another city. So you're required to monitor your subrecipients. Now that monitoring can take various levels, but it depends on, because you have to evaluate the subrecipient's risk of noncompliance. And that determines the level of monitoring that you have to complete. So the evaluation can include, you have to evaluate the risk. If it's a brand new nonprofit you're providing a grant to that's never had a single audit, has 3 people on staff, and you don't know what their internal controls are in place, you're going to be required to, you're going to assess them a higher risk than you would maybe another local government that you're passing through to. So you have to document your assessment, document how you assess your risk, and then depending on the results of your assessment of the risk, that determines how much monitoring that you have to complete. Okay? Yes?
Who do you find is actually doing this monitoring in the cities? Is it like the audit division or is it the actual program director?
So the question is who we see that's actually doing the monitoring in cities. And it does tend to be the program manager that's doing the monitoring, not usually the finance department. There are situations where the finance department is the monitorer, but usually it's like with your CDBG, it's usually your housing people. Your housing people are the ones that are going to go out and do either, depending on what they've assessed the risk of noncompliance to be, whether they're going to go do an on-site visit or just do a review of financial statements and a review of the single audit of the entity to see what findings there are. So it's usually it has to be in place. There has to be a process for monitoring to be in place. Okay, and let's see, we've got on here. Yeah, so you're going to monitor the activities to make sure they're in compliance, not only with the federal award requirements, but also you need to monitor to make sure they're in compliance with any requirements that you put into the subgrant with them. If in your subgrant you require them to provide reports to you every 15 days, well, you need to make sure that you're monitoring that those reports are coming in timely. I know that's being a little extreme, but you have to make sure that they are in compliance with your own requirements as well. Let's see. Yes, and so the monitoring, again, it can include reviewing the financial and programmatic reports, because it's not always, when it comes to these subrecipients, they're usually providing a service. So you want to monitor that they're coming, not only the financial results, but also the programmatic results. Are they achieving the goals that you set out for that particular grant? If they're not, is there a reason? Is it documented? Are you aware of it? Or did you not know? So that can be the issue. And then you want to follow up and ensure that they take timely and appropriate action on all deficiencies. So if you note a deficiency or if in their single audit performed by separate auditors noted a deficiency, did they address it timely? So you want to make sure that you're following up with that. Okay. So you have some results after you assess the risk of noncompliance. Again, you can consider imposing specific subaward conditions to ensure that compliance is achieved on a go-forward basis, and consider taking enforcement action against any non-compliant subrecipients. Now, one thing you want to pay attention to as well is you might be providing a really small grant to this nonprofit agency, and you think, oh, well, that means they don't need a single audit. But they could be getting 100 grants from local agencies that would trigger that need. So you don't want to just focus on your own dollar amount of funding, but make sure that, because they might be required to have a single audit if cumulatively they have the $750,000 expenditures or more. So you have to have, there are requirements for your subaward agreements with your subrecipients. You have to have an agreement in place. I don't think, now that I'm thinking about it, I don't think we've had any exceptions lately where clients have not had a subgrant, a written subgrant in place. It's highly uncommon, but it used to, probably 10 or 15 years ago, we would stumble across this quite often where there was not a formal grant agreement, subgrant agreement in place. So these are the requirements of the things that, in addition to all your programmatic requirements, these are what needs to be included in your subgrant agreements. Lots, 2 pages. And then if you include an indirect cost rate, that should be in the agreement as well. All right, and more requirements. Okay, procurement. So this is the hot topic that you want to get ready for, because this is required July 1, 2018, which is amazingly not that far away when it comes to deciding whether you need to do any modifications to your procurement policies, because that can take time and it's not something you can do overnight. So they need to be in place by July 1, 2018 for implementation. So again, the grace period from the date, this 3 full fiscal years, that was 3 full fiscal years from the issuance of the uniform guidance when that came out. So now that's going to expire, again, July 1, 2000, well, for fiscal year client. For those of you, I don't know if any of you have an off year end, but if you have a June 30 year end, you have to implement for June 30, 2019. Excuse me. So, and then again, I want to point out that if your implementation is deferred and you have not already documented in your records that you have elected to defer, you do want to make sure that that's documented in your procurement records this year, because that will be a question as part of our single audit. So you don't want it to be a finding, because we're telling you now to get that documentation in your records if you've deferred implementation. So if you have it in place now, then when we do the single audit, it won't be a finding. So there are 5 procurement methods. Now again, this is just a requirement for federal awards. I've had some clients ask questions where they said, can we just implement this, can we change our purchasing policy completely citywide? That's a decision that you would have to make yourselves, but this is for federal contracts. So contracts funded with federal grants, these are going to be the requirements for the procurement that need to be implemented starting July 1, 2018. And one more point is, if you have a grant that was ongoing, it's only going to be for new contracts. You don't need to bring your existing vendor contracts into compliance. It's going to be, until those are spent out. It's only going to be your new contracts that are let after July 1, 2018. Yes?
Does this apply to FEMA reimbursement as well?
Ooh, does this apply to FEMA reimbursement? That is a very good question, because those grants can be very interesting on the timing. So if you know, here's going to be my guess. I'm going to tell you it's a guess. If you know you have an emergency and you're going to be applying for FEMA funding, there are one of the procurement measures is about emergency. So we'll get to it. I think it's in under number 5. But if you know, but emergency is going to be a different issue. Emergency is emergency. There is the carve out for emergency. So you want to have this built in. But if you know, once you're past the initial emergency stage and now you're moving on to cleanup and recovery and things like that, then you would want to start using these guidelines. And if you know you're going to be requesting reimbursement. My guess is FEMA will probably have some guidelines that will specify that, and would be something to maybe look ahead early. That's a really good question. Yes. So, any other questions before I dig into these 5 methods? Okay. So micro purchases, those are $3,000 in the aggregate. If it's for construction, then $2,000 because that's the trigger for Davis-Bacon Act. So those are micro purchases. There do not need to be quotations in those cases, but you should have an equitable distribution among qualified vendors. What does that mean? What is qualified? So COFAR, it's escaping me what that stands for, Committee on Federal Award something, they suggest 3, which kind of makes sense, that logical, more than 1, 5 might be too many. So 3 is kind of a happy medium, so minimum of 3 is kind of a good rule of thumb to what qualified vendors would be. Then the next level are what's called small purchases. Now this is the term that's used in the uniform guidance, small purchases, but the dollar amount of that definition can change. But there's a website of where you can find it. So it's simple and informal procurement methods can be used. It cannot exceed the simplified acquisition threshold. So that's the term in uniform guidance. Now that threshold as of today is $150,000. So you're between your $3,000 and $150,000 are called small purchases. That number is updated. I don't know if you can read it, but the little acquisition.gov website is where that threshold will be updated if it goes up. So price and rate quotations must be obtained from adequate number of qualified sources. Again, that rule of thumb of 3 is probably a good idea, but you can do more than that. So simple. 3, sealed bids. So anything above the simplified threshold. So anything over 150,000, it's preferred. So the difference between method 3 and 4. 3 is sealed bids, 4 is competitive proposals. So sealed bids is when it's more of your fixed fee contracts, preferred for your construction contracts, and they have to be publicly advertised. Now your competitive bids are, again, same dollar threshold above the simplified method, but you want more than one source for the proposal, and these tend to be the fixed fee and cost reimbursement type contracts where you want to be able to compare and contrast your consultants against one another, where you have to have a written method of evaluation and selection. It's not just lowest responsible bidder, which is what 3 is, lowest responsible bidder. 4 is competitive, has to go to the most advantageous proposal. That's a pretty interesting term, but most advantageous proposal for the grant. Okay. And then finally, your sole source. So here's where your emergency can come into play. You can't have sole source, but sole source contracts have to meet 1 or more of the following 4 criteria. So there's a single source, it's a public emergency, so it actually has to be that's defined as a public emergency. Or if you have something where you've made a written request to the grantor to get authorization for doing a sole source contract. And then if you've gone out to bid and you've determined that competition is inadequate, so long as you document it, then you can use the sole source procurement method. Any questions on that? Yes. Yes, so the question was whether as far as incorporating this into your general entity-wide procurement policy or purchasing policy, is it adequate to have a separate section that says this is for federal grants, federally funded grants or contracts? Yes, a separate section would be fine. It's not required to be entity-wide, just for the, but like I said, some clients were thinking of doing that, but that's a one-off if you want to follow these guidelines, but yes. Any other questions? Yes.
What if our policy is already more restrictive? Do we need to specifically state that?
So the question is whether if your policy was more restrictive than this, would you have to state that? That's a really good question. So, could you go and be less restrictive when it comes to your federal grants? Probably not, because you would have to explicitly say that if you were going to follow the federal procurement rules for federal grants. If they were less restrictive than your own policy, you should have a positive statement that says that. But otherwise, if your policy is already more restrictive, then you're already naturally in compliance with these requirements.
So none of this will occur
think not. No, I would think not. I don't know if everybody got that last part. If your policy is already more restrictive, do you have to have that positive statement in there? And I would say not, because it would follow the rules. You wouldn't have, in theory, you wouldn't be able to let a contract that was not in compliance with these requirements. So just your annual reminder about your state controller's office reporting requirement. So it's for expenditures. If you have expenditures of less than $750,000, then you are required to submit a written notification of the exempt status to the state controller's office. If you have expenditures of more than $750,000 but no state pass-through agreements, you excuse me, you can either submit a copy of your audit report showing that, or an explanation letter to the state controller's office telling that you received no, stating that fact that you have no state award. Excuse me. But when you have expenditures over $750,000 and you have state pass-through awards, you are required to file a copy of your reporting package with the state. So that reporting package includes all 5 of these items. So the single audit report, your financial statements, your management letter, memorandum on internal control. That's if you're our client, because our policy is to issue a separate memorandum on internal control. So that's why you have to include that in the reporting package. Excuse me. Corrective action plan, and then your summary schedule of prior audit findings. So now it's 5 components, because now those last 2 documents are the ones that are separate, those separate documents that are on your letterhead now. So common findings. I'm just going to breeze through these because these are your responsibilities as far as the audit report, and we've talked about a lot of it already. So your corrective action plan, when we get into findings, your corrective action plan has to include the contact name, your actual corrective action plan that should be an affirmative action, it can't be passive, and then the anticipated completion date. You have to address the findings and want to make sure, because if it's a finding, the grantor is going to clear it with you at some point by issuing a management decision. So you want to make sure that you're actively clearing those findings. They shouldn't linger on for years and years. So common findings that we see, CFA preparation issues. Now technically this is what's called a financial statement finding rather than a federal award compliance finding. It's just the terminology. Because you are required to prepare an accurate CFA. Whether or not we compile it from the data that you provide us, the CFA is your responsibility and needs to be prepared accurately. So the most common issues, again, misstating the federal expenditures, either over or under statement of the expenditures, including non-federal programs, failing to identify pass-through information, those pass-through entities have to be identified, and failing to identify subgrants. Okay, so again, that's why we say you want to analytically review your own CFA before presenting it to the auditors to make sure it includes everything necessary. Okay? Subrecipient agreements, we've talked a lot about that. So the subaward grants, again, you have to include certain data in those agreements, including the DUNS number, the federal award date, the CFDA number. So if those are not included in your grant agreements, that's a finding. Okay? Timely submission of financial or performance reports. This is, I would say, I didn't put these in order, this is the most common finding I would say that we've been seeing over the last few years. Because the agency program requirements require, in Part 3, and the grant agreements require filing. And some of them have requirements of, within 90 days of year end, within 60 days, 30 days. Those requirements, unless, we'll, as the auditor, we will take into account, weekends and holidays and things like that. But other than little minor things like that, they should be being filed timely, and you should have a process in place to file the reports timely, because these are the types of non-dollar findings that are easy for you to remedy and comply with. You want to get those procedures in place to make sure that you're filing those reports timely. And remember, your Caltrans grants have that provision in the special conditions that you have to file reimbursement requests every 6 months. And if you do not file it within every 6 months, then you have to communicate with them. So that can be as simple as an email, but if you don't have that communication in place, then it's an exception and a finding because we can't see that you communicated with them, and that puts your funding in jeopardy, okay? I think I skipped ahead on that one. This one was more about financial performance reports. Then you have grant reimbursement request if there's an interval to comply. Using an incorrect reimbursement rate. This one, and this is matching. So don't think that you can't rely upon the grantor to catch whether you are requesting the incorrect amount for reimbursement, because they will sometimes not notice. I don't know why, but they don't always look to that level of detail. They're looking at your supporting documentation. They might be checking it mathematically, and maybe the reimbursement rate has changed over time, and they didn't notice that you used the incorrect one. So that's another common finding that we see, especially when they're more complex, like those street grants, where your preliminary engineering has a different reimbursement rate than your construction. So it's not a blended rate. You have to look at the components and make sure you're requesting the right amount. We had one client last year that had a grant agreement with Caltrans that at one point the reimbursement rate was 100% because there was another sub-agreement with Caltrans, but then expired mid-project, and it was to revert back to the 54% reimbursement rate. Caltrans the client kept requesting 100%, and Caltrans kept reimbursing them 100%. And when we came to do the single audit, looking for the support for that continuance of the 100%, it couldn't be found, and Caltrans agreed that the client had to write them a check for $700,000. So you can't rely upon the grantor to catch your reimbursement rate. You want to have those procedures in place to make sure that you are requesting at the right rate. I know, I see a lot of grimaces. That was, they fought. They got it. It was, the final amount they had to write the check was a little bit less. My guess is because Caltrans agreed, they probably should have caught it on their side as well. But they didn't get down to the 54%, or excuse me, they didn't get up to the 100%. But there was a little bit of negotiation in there. Compliance with allowable and eligible cost limitations. This one is another one that's very common in the COPS grants, the 16.710, in your SAFER grants and your the DOJ grants, those types of grants where they have little provisions and they can be very different from grant to grant. Some will only pay overtime. Some will only pay a, what do they call it, entry-level salary for an officer. Others will pay only certain components of the salary, but won't allow for uniform allowance or won't allow for other little special pays. So you want to make sure that you're looking to the details of the grant award letter that tells you what you can charge. Because again, if you send them a bill for everything and you haven't exceeded your, if you have $1.5 million grant and you're submitting a reimbursement request for $100,000, they may not notice that you're including components that are unallowable until you start getting closer to the grant award spend out time. So you want to make sure that you're finding those corrections and not us, because we have a lot of times where we come and audit and we're looking for the specifics. Did you exclude uniform allowance? Did you exclude this particular benefit? And if it's included, then you might have to write a check back to the feds, or usually those haven't been spent out when we're auditing those, and you can correct it on a subsequent reimbursement request, but still you want to make sure that you're paying attention to the components. Another one, I'm not sure how many of you have the Section 8 Housing Choice Voucher Program. It's the compliance with failed inspections, follow-up on failed inspections. It seems like a small issue, but it's a very common finding that we see where it requires repairs within 30 days, and if not completed, documentation of extensions should be made. Again, it's that documentation. There's a requirement for documentation in the file. It doesn't mean that it didn't take place, but if we can't see it, then it's an exception and a finding. I touched on this one earlier, physical inventory of assets acquired under federal awards. Property records have to be maintained. They need to include the percentage of federal participation and there are other documentation requirements that I'm not going to detail here. And a physical inventory is required every 2 years. So the common exception is failure to include the required elements in the property records, and then also the failure to complete the required physical inventory. So they're pretty easy things, but you forget about them. You bought that piece of equipment with the federal award grant and it's still in use, and you just don't think about the fact of needing to keep these records in place. And it may not be tested as a major program, so we might not ask the question in those interim years. But when we get to that, when it bubbles back up to the top and is required to be tested, you don't want us to find that you haven't been doing it, because then it's a finding in that year. So, I have a few additional resources. I'm sure you can all read that. But that link is a good link. You know, again, we're in year 2 of uniform guidance. But this is still, you might still, as you're still transitioning from old rules to new rules, want to know and have some resources for where the new requirements are, what went away, not much went away, but where things are now as opposed to where you knew that they were in the past. And so the whitehouse.gov website has some good crosswalks. It has the old circular documentation and then where it is in the uniform guidance. And then also shows you obviously what was added. So there's one, I think this is the last, agency exceptions. So this is an FYI for you, but the OMB keeps a list of agency approved exceptions because there are certain, you know, we talked about the compliance supplement and all of the requirements that go grant-wide and that are required for every particular grant, but there are some carve-outs. Now, as an auditor, we've been told that if we're auditing a particular grant and we're seeing all kinds of exceptions, you know, you're not in compliance with a bunch of different things, that we're supposed to stop and look to see if there are agency exceptions for those particular requirements. And so this list that's maintained on the OMB website, because there are some grantors that say, well, we don't want to have to comply with that particular requirement in the uniform guidance. And there's this list. But again, this list is not complete listing, so you want to go to your grantor and you want to check with your grantor, are there any exceptions to the uniform guidance? Ask them on the front end, then you have it in your records and you know what you don't have to comply with. Okay. Any questions? Oh, yes.
Hi, my question is, what is the most popular comprehensive tool, like enterprise system, that would bring all these different aspects of grants management like at one place? For example, their filing requirements, their timelines, their compliance, and you know, all those aspects. For example, our agency deals with a lot of grants. There are different project managers, there are different departments, you know, so all that becomes a little bit challenging for us to manage, and we end up having those like manageable findings just because of that.
Right. That's a really good question, because unfortunately, I think the most common tool I see is an Excel spreadsheet. You know what I mean? When you think of especially when grants administration is decentralized to the departments, of just knowing who the grant managers are. So you may have a grant manager, you'd still have to have a grant manager, might not be a formal one, in finance to be the one that can pull it all together, and that's where I've most commonly see an Excel spreadsheet. But then making sure that the departmental grant managers know their duties and know their requirements for providing reporting to the finance department, and that's centralized. I know, unfortunately, unless anyone else has any good sample tools, that's really the most common that we see.
Thank you.
Yes.
That means we need to build one.
That's right. There's an opportunity. Any other questions? Great. Thank you.